Hey guys, welcome to the Insights Lab podcast. We're going to be looking at the outlook for the remainder of 2023 on the domestic markets. Here I've got Mark. What are your thoughts about the climate at the moment? How the market's treating you?
Yeah, I think it's been a pretty interesting year so far. If we kind of look back at the start of the year, we pretty much like struggled through 2022. October 22 was the lows, I think. Some stocks bottomed out in July, and since the start of the year, I think we're up year to date around 10% on the S&P, but the Australian stock market is lagging that a little bit. Overall, I think our economy has been, holding up pretty well relative to the rest of the world. If we look at some of the key metrics like inflation, I think we're sitting around 7 or 8%. I don't know exactly where, but compared to, like the UK, they're sort of on double digits. They're on like 13, 14%. So I can only imagine like that being, taking its toll on the average consumer.
Yeah.
And anyone who's got debt, which I imagine like maybe 30, 40, 50% of anyone living in the UK, they've got a mortgage, they're seeing the, interest rate rises, and they're
Experiencing mortgage stress and their repayments are going through the roof.
And who gets squeezed? It's usually the sort of the middle class and the lower class. And there's the argument that people will be priced out and they'll continue to buy property at a lower bracket. So they'll be sustained. But, what happens when a lot of property crashes all at once? You've got like the ultra wealthy that come in and buy the properties at like cents in a dollar.
Yeah.
But yeah, overall, I think Australian market has held up pretty well. And there's a bit of a probably like a lagging effect where we're sort of seeing that the average consumer sort of experience that mortgage stress a lot later because a lot of people had cash saved up. A lot of people were still traveling. I think 2021 was when, it was 2022 when people started traveling again.
Yep.
And 2023, I don't think people have slowed down. Like I know I did a trip to New Zealand early in the year. You've done Japan. And if you talk to your friends, I think there's still a lot of people taking holidays, but we're slowly getting to that point now where people are looking at their spending habits and they're still spending, but they're like, what are some areas that I can sort of look at my finances a bit more closely?
Yeah, absolutely. What were your thoughts about the latest interest rate hike?
Yeah, it's. I think it wasn't like a massive surprise. I know like the US, they're talking about like we're coming to the very tail end of the rate hikes, or at least getting to a point where we're going to pause to see what the last 13 or 14 rate hikes have actually like done.
Yeah.
And we saw like the round of regional banks getting decimated, and that's a big sign for the US to kind of really look at whether they increase interest rates, So there's a cause for pause, but then the opposite side of the argument is inflation is still very high despite these banks crashing, despite 13 or 14 consecutive interest rate rises. And I think I remember seeing a graph where we started raising like April 22.
Yep.
So this is, the 14th rate rise.
Rate rise, yeah. So currently at 4.1%.
Yeah, you were saying Goldman Sachs came out with something. What was
Capital Economics and Goldman Sachs just had a forecast of 4.85%.
Yeah.
They think that it's coming at the end of this year.
So each raise has been...
It's another three interest rate hikes.
Yeah, quarter percent, three of them would bring us to, about 4.8. Yeah, 4.85.
Yeah.
So
that's pretty concerning.
Yeah, I mean, like in practical terms, the average variable home rate loans are going to be around like 8 or 9%. Because there's the additional costs that's worn by the end consumer. So I think a lot of people are probably starting to feel the pinch. But if we start to pause and then this inflation starts to cool down, sometimes which happens quite quickly, we'll start to see people spend again, and I think that could jumpstart the economy. But I think my prediction is we're going to see like a lot more struggle for the remainder of 2023 and potentially a recession into mid 2024. But I think from 2025, I'm quite optimistic. So I think it's going to be slow, and then probably 2024 is going to be worse, and then 2025 is going to be a pretty quick growth.
Yeah, absolutely. How do you think that's going to translate to the stock market? Do you think people, as you know, there's a devaluation of the dollar,
Yeah.
do you think more people are going to be trying to buy up a lot more assets? Or do you think that it's going to translate over where there's going to be a lack of liquidity and it's going to be less attractive for institutions to make bigger investments for Australian companies?
Well, look, from what I recall, 2021 was like the largest retail participation in terms of the stock market.
Yeah.
And you know, that was GME, that was like all the meme stocks, and also, you know, this is probably the generation where younger people are probably most financially savvy, like compared to any other previous generations, just naturally being, you know, growing up with the internet. You know, like growing up, like boomers weren't looking at like margins and like derivatives and puts and options and that sort of thing. But now we've got, you know, a 21-year-old in his bedroom learning about option trading, you know?
Absolutely. I think their cryptocurrency brought a lot of people to the table. And because obviously cryptocurrencies, been relatively hit and like the market's pretty dry at the moment and definitely on a downturn.
Well, the other side of the equation is like a lot of people have been burnt. So like, you know, they've probably got their tail between their legs. They're probably not going to invest for a little while. And like most of the people that dabbled will take a break. But then there's also going to be a bunch of people that
the real go-getters.
The real go-getters like us. Like it will persist and continue to learn. But I think like in terms of the stock market, it's usually forward thinking or forward predicting. So we often see like an earnings recession, you know, after the stock price recession. So, you know, like let's say if we're predicting a mid 2024, you know, earnings recession, and that's the lowest point for companies, and then from there, every year on year, every quarter on quarter, earnings starts to grow, then I think maybe the market bottoms out sort of 6 months earlier, 6 to 9 months earlier, which leaves us probably in the next quarter or 6 months. So I'm actually looking to, you know, buy stocks. It looks like, you know, the tech company is probably not a great place to buy.
Yeah, that's what I wanted to talk to you about. I mean, you were talking to me about the earnings season. I know that you've got a large interest in the American markets.
Yeah.
What were some of the standouts in the last reporting season? What was your take on it all?
Well, how's this, right? So the NASDAQ is pretty much back to its all-time highs, or like 10% from the highs.
Okay.
And pretty much 8 companies are responsible for the entire move. So if you take out these 8 companies, the S&P 500 is actually still down like 28% or something ridiculous. So it's insane. So these 7 companies, at the top of the list is like NVIDIA, which is like 170% or something like that.
Okay.
They actually crossed the $1 trillion market cap.
Insane.
You know, valuation at one point. Absolutely fucking mental, dude. Can I say that?
Yeah. Absolutely.
And there was also Facebook Meta, which people were like second guessing, and it just kind of shows the psychology when Meta dropped down to about $100, and you know it's done 2.5 times since then. It had a bit of a crisis, and people were saying the rebranding from Facebook to Meta was a disaster, but you know they started turning a profit, and then remember all the job loss, like job cuts and stuff. So you know both Google and Facebook or Meta, the CEOs came out and said, look, we're going to trim the fat basically, and there's no more, you know, mucking around anymore. We're going to get rid of a lot of these like dead weight and like remove staff and improve efficiencies, and shareholders responded to that. So we've seen Meta, NVIDIA, Google, Amazon, and what's the other one? I think those were the 4 largest ones, but pretty much those 6 or 7 companies have been responsible for majority of
the
the
leaders
move.
are leading.
Yeah.
That's awesome. Going forward, do you forecast this being the same story next earnings season?
Yeah, it's a tricky one. Like I know I read somewhere that when we're deep in a bear market and we reclaim and get out of the bear market and start a new bull market, often we see like a 20% swing on the other side. So it's hard. It's hard because you look at Apple was the other company. So Apple's at an all-time high at $180. It's actually set at all-time high last week. I think the previous all-time high was 178 or so.
Yeah.
And if we see a further 20% move in the NASDAQ, then that means that we potentially have another 20 or 30% on Apple, which means like that could bring that up to $240. And I think that's pretty insane to see like some of those companies that have already done double, nearly triple, and to see another 20, 30% move in the market. But also this could be a bear trap, right? And like everything starts to come back down again.
Yeah, look, and I know that we both have a look at the volatility index, and we always kind of keep an eye on that to gauge, fear in the markets.
Right.
And this is the lowest that I've seen it in a long, long time. Currently at $13, I think it is. Just have a look. Yeah, $13.83.
Yeah.
And in the last month, it's down 18%, and it's down 44% in 6 months.
Yeah.
So the markets in that regard, it's pretty good. But I mean, we look at what's happening in the US politically, and it just seems
Unstable.
very, very, very unstable. There's a lot of things happening, and that strikes me to be a really low figure in terms of the political climate. So it's definitely something to kind of keep an eye out from. I know that you're really, invested with AI, and you've been learning a lot about, and you're keeping up to date with everything.
Yeah.
What are your thoughts about these major players? Do you think it's this? What do you attribute these larger than expected earnings being attributed to? Like, I know me and you spoke before about NVIDIA's business model.
Yeah.
Did you want to, for the listeners, do you want to elaborate a little bit more about that? Like about what we're talking about, how it was, breaking it down in terms of software and hardware?
Yeah, so I think from the last earnings report, NVIDIA obviously beat analyst expectations, and there was, I think, 27 billion recorded revenue, and of that 27 billion, 11 billion was reported to hardware, or like to the graphics cards and the chips, but then that leaves like another 16 billion elsewhere, right? And a lot of that is to do with software. So when NVIDIA provides the hardware to these different industries, they're supplying chips to architects and building and construction. They're supplying it to the healthcare sector. They're supplying it to mining, you name it, right? Like every industry. But they're also assisting the gamers, the healthcare sector. They're coming into these places and providing them with the software. And that's an additional revenue stream for these companies. But I guess to your point around AI has more or less been the driving factor behind these, like the multiple expansions, like sort of seeing a lot of the last 50% that's been added onto NVIDIA has been because of ChatGPT.
Yeah.
And, the implications of what AI is potentially doing for us. Because up until this point, like everyone's like, oh yeah, AI is going to take over at some point. It's going to do some pretty dramatic things. But we haven't seen any real applications besides like a couple of robots like serving us food at restaurants and stuff.
Yeah,
and
yeah.
like, it's kind of gimmicky. We're not at a point where like we're really ready to drop $5,000 on a robot that will help, assist us in our homes. Like that might happen in aged care and like, sort of like people who've got disability and stuff in the near future. But ChatGPT really showed us the ability of two-way dialogue with something that is able to work with a data set. And it kind of is an amalgamation of, it's an amalgamation of machine learning. So what we've seen through advertising and through algorithms in social media and stuff. But now we're having a conversation and it's collecting data. It's learning based on our responses to give us better responses. And, it's not perfect. Sometimes AI hallucinates information and the data set is limited to computer processing power. But ultimately, NVIDIA has designed the H100 chip or whatever they call it, and this is specifically for, the supercomputers. It's designed specifically for AI, task-orientated computing. And that's been the driving factor. People going, oh shit, this fucking, ChatGPT, this AI thing, AGI thing is real, and it's probably happening in the next 5 to 6 years rather than the next 20 years. So there's a quick race to accumulate these chipsets, and a lot of people see Tesla as like an EV company, but they've actually started purchasing a lot of chips themselves because they're looking to create their own AI, right? So I think what we're seeing is, I think we've talked about this before, but like an arms race in terms of who can generate the most, the best version of AI.
Sector-specific AGIs.
Yeah.
It's not even on a domestic front. It's also on an international level.
Yeah.
Geopolitical players coming in, they understand the value and the economic output that AI could give them. I think the valuation was 13 trillion by 2030, economic output just based on AI.
Yeah.
China's obviously a big player. I know Singapore, India, everywhere.
Yeah.
I think a lot of focus is on, Microsoft, against Google. But, definitely on an international basis. It's going to be really, really interesting to see how this plays out.
Yeah.
Personally, I know that you're pretty big on ChatGPT-4. How's it improved your workflow?
100%. I think I'm not getting the most out of it. I'm using it for very basic features. I know we used it for the Black-Scholes model and a little bit of, more advanced Matt's equations, right? To figure out how to price stocks and that sort of thing. But yeah, I've used it personally for, sort of summarizing a lot of content, using it to rewrite, shorten, rephrase, and simplify content in marketing for what I do for work. But I've also used it for things like diagnosing web development stuff where the code has it's helped me write code or Excel formulas to either fix up alignment issues or graphic stuff based on the code for some websites, but it's also given me formulas to create some Excel formulas and stuff.
That's awesome.
Yeah.
I'm so grateful that you got me into ChatGPT as well. It's definitely improved the way that I research, and it's really made it easier instead of going through multiple articles to find an answer. But you are right. There are some limitations with it, and you don't want to leave it. You want to set the parameters, pretty tight, and you don't. And if you're going to ask it a question, make sure it's not up for interpretation.
Yeah.
Straight facts.
Yeah, you hit the nail on the head. It comes down to the prompting.
Yeah.
So the more information you can provide it, and the better the prompts, the better the response. A lot of people will test it and give it very basic prompts and no context, and then they go, it's not there yet. But
yeah, absolutely.
potential.
It just goes to show with the right people, it's a very effective tool.
Yeah. Yeah, for sure. Well, look, that's I know we started with the Australian market and we ended up on AI.
They got sidetracked.
But hopefully, hopefully you guys found that pretty interesting. We're definitely in the process of we're definitely in the process of seeing where AI is going to go. I think if you were to ask me where ChatGPT is going to be in a couple of years, I know there's been talk about using the visual aspect, and for example, you take a photo of ingredients in your fridge and it'll come up with a recipe, and
insane.
Understanding
That's
that,
insane.
understanding that sort of stuff, and maybe it will have its place in paralegal stuff and accounting and that. But I think the other area that's been interesting is generative AI. I don't know if you've seen Photoshop.
Yeah, Mid-Journey.
Yeah. So it's AI generated images and videos, but also large companies like Adobe are integrating it into Photoshop. So if I had a crop of your head and your shoulders, and I use generative fill, it could look based on what you're wearing, create a background, and it can extend your arms and create limbs that it doesn't have information on.
Maybe we should test this out for future podcasts as well.
Yeah.
Like if we do any video related content,
Yeah.
maybe we can test it out. That'd be really interesting, actually.
Yeah, for sure.
Good
So
idea going forward.
it's look, I'll leave the audience with this. I think like in the short term, it's probably overhyped with good reason. Like it's interesting, but I think over the long term, it's probably underestimated. Like the difference it's going to make. So a little bit like when the internet sort of first came. Like now we think it's normal to use Google search engines or search engines in general, but before the 2000s, we didn't really have, like before Yahoo and before like Ask Jeeves and like all those search engines.
Yeah.
It's hard to imagine a world without that, but like you go back 25 years and there wasn't a search engine, and in 25 years from now, we're gonna not be able to imagine a world where we're not using, AI for our everyday tasks.
Yeah, we're growing at a phenomenal rate. It'll be interesting to see how this impacts businesses. And I can't wait to find out some more use cases for it. Thank you so much for giving us an insight on
pleasure.
the domestic and the international markets. And look forward to talking to you about this again.
Hope you guys enjoyed it. Cheers.